It is Woodside, obviously the largest listed energy player on the ASX. Now, shares lower ahead of that anticipated peace deal to be signed between Iran and the United States on Friday. President Trump posting on social media, the deal with the Islamic Republic of Iran is now complete, adding the Strait of Hormuz would be open toll-free, and the US naval blockade will also end. He said, ships of the world, start your engines, let the oil flow. Now also, Woodside's US shares closing higher on Friday. It was up about 7% on a Bloomberg report of a takeover interest from ExxonMobil. Woodside has declared it's not aware of any proposal and adds it is not in discussion with Exxon regarding a potential transaction. US shares, as I mentioned, they're up about 7% on the New York Stock Exchange before the announcement of a peace deal with Iran. But as you can see there, shares coming off today to match the fall we've seen in the oil price. So Andrew, let's start with you then. Looking at Woodside, look, who knows what Exxon, whether it really is looking closely at Woodside, but given also the latest developments and where the oil price could well go, how do you see Woodside at the moment?
Yeah, it's an interesting one. Pre all the excitement, if I can use the understatement of the century, it was trading sort of in the 20, well, I think it got as low as 20 there at one stage, to that 20 to 24 band. And there's a chart we prepared earlier. And then once all the news kicked off, as you can see there, it had quite the run. It's trading on a PE of around 11 times. It's about but yet forecast earnings per share growth of only around 4%. I note consensus is around $33 versus 30. If there was to be a change of ownership, a potential takeover type style transaction, you would have to think Exxon or whoever it is would have to pay a premium for that. You're not going to be able to just buy it on a valuation basis. And Woodside have done a pretty good job of de-risking themselves a number of their big projects, Scarborough, Pluto, etc., by sort of selling off smaller equity stakes to different players, the Japanese, etc. But I think ultimately for this one, it is going to be hostage to the oil price. We've just spoke about before that we think the oil price is going to be coming off. So I would think that in an environment where I think oil will probably come off further, even though the PE is not demanding, I think it's probably going to come under some pressure. Probably the only reason it would be a hold, Andrew, would be that if there is some corporate activity, and bearing in mind that a lot of these global players, because of ESG concerns, it's harder for them to be going out and drilling for new oil. You are going to see a fair bit of consolidation in that space, and obviously Woodside's the main reason. So for that reason alone, I'd say it's probably a hold. If you consider the underlying industry dynamics, though, it's probably a sell. So I'll stick on the hold side.
All right, more of the upside there, but lots at play, of course. David, how do you see it, and what's that chart telling you?
Well, the chart, it's as Andrew pointed out, it was $22 in December and rallied up to 36 nearly, just slightly below 36, and here we are down at 30. I'm very much of the same view as Andrew on this. Look, Woodside has to be probably the most undervalued global, oil and gas energy giant. So no surprise that the likes of Exxon are looking at it. It would be difficult to see it getting past the Investment Review Board because it's like selling the farm. What have we got left if Woodside gets taken? Like what happened to Santos? There was a bid for Santos. Was it a year or thereabouts ago? Got knocked back. So I think the same thing would happen, but it's certainly trading at a very low multiple, and especially with this quarter, the numbers are going to be stellar when they report their production numbers. So I definitely would not be selling it, waiting for those numbers. And you could see a lift in their dividend. Their dividend yield is around 7%. Taking the franking credits, it's just over 7%. So that could easily go up. But the chart itself, the trend right now, short term, it's going through a corrective stage. There's a very big support level on my chart at $27 for Woodside. I'd be surprised personally if it got down there. If it could get down there, of course, if the oil price, falls 20-30%, easily. But it's got a very big support level according to my chart here at $27. But look, I'd be still a holder of Woodside. And like I said, on undemanding multiples, as Andrew pointed out. And again, we probably need to review our energy policy in this country, because it's really important for us to look at that in terms of our security, and especially in the gas sector, which most of our gas gets sold overseas, LNG. So I think that needs to be reviewed for our own security purposes as well.
Yeah, certainly in terms of domestic reservation, I mean, that's certainly the case on the West Coast, but they've been slow to the party here on the East Coast. All right, so that is a double hold then for Woodside, given what's happened geopolitically, but also potential speculation there that Exxon may well be taking a close look at picking it up, as David mentioned there, potentially the most undervalued global energy giant.